Welcome to the deep dive. Today we're digging into a bit of a puzzle from Amicus Therapeutics' latest earnings call, their Q2 2025 results.
Yeah, it's fascinating because you saw really strong revenue numbers, some exciting strategic stuff happening, but then, well, the stock reaction wasn't quite what you might expect.
Exactly. So our mission here is to try and untangle that, cut through the noise, figure out what's really going on behind the numbers, and, help you understand what it all means for Amicus.
Right, because they're a key player in rare diseases, so these updates matter.
Okay, so let's hit the headlines first. Amicus Q2 2025. Total revenue came in at nearly $155 million.
Which comfortably beat the street's expectations, right? Consensus was around $147 million.
Yep, a solid beat. That's about 22% growth year over year as reported, or 18% if you look at constant currency. So strong growth there.
Definitely strong top-line performance.
And here's the nuance. The earnings per share, the EPS was a bit mixed. Non-GAAP EPS landed at a penny.
Okay, and the consensus was looking for 2 cents, I believe.
That's right. So a slight miss there on the non-GAAP side. And then the GAAP EPS, the standard accounting number, was actually a loss of 8 cents per share.
Which is wider than the 5-cent loss they had in the same quarter last year.
Exactly. So you've got this great revenue story, but then the bottom line looks a little less rosy, at least on the surface.
And that's probably where the market hesitation came in,
Yeah.
That immediate focus on the EPS miss, even with the strong revenue.
It sets up this tension, doesn't it? Short-term accounting versus maybe longer-term strategic value. Is the market seeing something we're not or missing the bigger picture?
That's the puzzle we need to unpack.
Okay, so that revenue beat, let's dig into that first. What was really driving it, especially the newer stuff?
Well, it was kind of a two-part story. You had Galafold, their established Fabry disease drug, still doing really well, pulled in almost $129 million.
Okay. Solid performer.
Yeah, about 12% growth at constant exchange rates. So stripping out currency effects, good operational growth, consistent.
But the big jump.
That was Pombiliti plus Opfolda, their Pompe disease therapy. That surged to nearly $26 million.
Wow, okay.
Yeah, that's a 58% jump at constant exchange rates.
Yeah.
It's, really significant acceleration for a newer launch. Shows very strong uptake.
58% for Pompe is huge, especially compared to Galafold's trajectory at this stage. But let's circle back to that GAAP EPS miss. You mentioned the wider loss. What expenses were really weighing things down?
Right. So operating expenses were up. GAAP OPEX was nearly $149 million. Non-GAAP was almost $128 million.
Okay.
But here's the absolute key detail. Both of those numbers include a $30 million upfront payment.
The payment for what?
For the U.S. rights to DMX-200. It's a new pipeline asset they licensed.
So that $30 million hit the P&L in Q2.
Exactly. And it was a strategic investment, not like some operational cost overrun. It directly impacted that GAAP net loss. Management even pointed out, if you back that out, they actually would have posted positive GAAP net income.
That context is critical. So the loss wasn't really about the core business underperforming. It was a choice to invest.
Precisely. It changes the whole narrative around that GAAP number.
But did the market get that message, given the stock wobble? And how's their cash looking after making that payment? Are they okay financially?
Yeah, they seem solid. Ended the quarter with $231 million in cash, equivalents, and marketable securities. That gives them a decent runway, especially since they're aiming for profitability soon.
Oh, okay, good cushion. So management had strong numbers operationally, made this big strategic bet. How did they sound on the call? What was the vibe?
Oh, definitely confident. Their main theme was consistency and momentum. They kept hammering home that this was their 17th straight quarter of double-digit revenue growth at constant currency.
17 quarters, that's quite a streak in biotech.
It really is. It signals execution. They talked about Galafold demand being strong, expecting a record year for new patient starts globally.
And
they said Q2 was the strongest quarter yet for Pombiliti plus Opfolda demand since it launched. Good momentum building in the U.S. and also in the new European countries rolling out.
So a clear growth path. Did they give any longer-term targets beyond just this year?
They did. The CEO was pretty explicit, said they're positioned to hit GAAP profitability in the second half of 2025. So like any quarter now.
Okay, that's a big milestone.
And they threw out a big ambition, exceeding $1 billion in revenue by 2028 for the combined therapies.
$1 billion by 2028.
Yeah, and interestingly, they noted that both Galafold and Pombiliti plus Opfolda have over $1 billion in peak sales potential each. So they see a huge runway ahead.
That's a very bullish long-term view. What about the science? In biotech, the clinical data is everything. Any updates there?
Yeah, they touched on that. They're continuing to build the evidence for Pombiliti plus Opfolda. Mentioned a recent paper in Muscle and Nerve.
What did it show?
Showed benefits for patients who switched from other enzyme replacement therapies. That kind of real-world data is gold, right? Helps convince doctors to make the switch.
Definitely helps build confidence. Okay, so Q2 looked strong operationally, ambitious targets, new data. How does this line up with their full year plan? Did they change their 2025 guidance at all?
Nope, they held firm, reiterated all the full year 2025 financial guidance.
All of it.
All of it. Still expect total revenue growth of 15 to 22%, Galafold growth 10 to 15%, and that high-flying Pompe franchise, Pombiliti plus Opfolda, still guided for 50 to 65% growth, all constant currency.
And profitability.
Still on track for positive GAAP net income in the second half of 2025. And they reaffirmed their non-GAAP operating expense range too, even including that $30 million DMX 200 payment.
Wow, okay. So sticking to the plan, despite that Q2 GAAP hit, signals real confidence.
Absolutely.
Let's talk more about that DMX 200 deal. They paid $30 million upfront. It's for FSGS. What exactly is that, and why is this potentially such a big deal for Amicus?
Right, FSGS, focal segmental glomerulosclerosis. It's a pretty nasty rare kidney disease. Can be life-threatening.
And treatments.
That's the kicker. There are currently no FDA-approved therapies specifically for FSGS. Zero.
Huge unmet need then.
Massive. So DMX 200 is a first-in-class oral drug, targets inflammation involved in the disease. This isn't just adding another drug. It's potentially opening up a whole new therapeutic area for them with blockbuster potential.
And the regulatory path, that's always tricky.
Well, here's something that might de-risk it quite a bit. Amicus said they have alignment with the FDA that proteinuria can be the primary endpoint for approval.
Proteinuria, protein in the urine.
Exactly.
Yeah.
It's a key marker of kidney damage in FSGS. Getting FDA agreement on using that as the main goalpost in the trial, that's a really big deal. Makes the path to potential approval much clearer.
Okay, that sounds promising. So DMX 200 is the big pipeline news. What else is happening? Any other growth drivers maybe for Pombiliti plus Opfolda's rollout?
Yeah, plenty happening there. They got approval in Japan back in June. They expect to launch in up to 10 new countries just this year, 2025.
10 new countries.
Yep, including places like Italy, Switzerland, Portugal, the Netherlands. Those came online in the first half, and they specifically highlighted the Netherlands.
Why the Netherlands?
Apparently, Pombiliti was selected as the preferred treatment for adult Pompe patients there. They think they could capture like 70% of the patients at one major site. Shows the potential for really strong uptake as they enter new markets.
70% market share potential at a key site is impressive. What about making the stuff? Any manufacturing updates?
Yeah, they gave some clarity there too. Their facility in Ireland, making the drug substance for Pombiliti plus Opfolda, should start supplying Europe later this year and the US next year.
Okay, scaling up.
And they announced a deal with Sharp to bring the final drug product manufacturing for Pombiliti into the US as well. Diversifying the supply chain, getting ready for more demand, smart operational moves.
Okay, so operationally strong, strategically expanding, manufacturing sorted. But let's get back to that market reaction. It just seems odd.
It really does.
The stock gets a little bump pre-market, like, okay, good number.
About 2.8%, yeah.
Yeah.
Initial positive reaction.
But then, by the end of the trading day, July 31st, it closes down 2.3%. What happened?
And on heavy volume, too.
Yeah.
Like nearly double the usual trading. It really suggests that despite the good news on revenue and the reaffirmed guidance, a lot of people saw that initial pop as a chance to sell.
A sell the news reaction, maybe?
Should be. Or just lingering skepticism. Maybe focused too much on that GAAP EPS miss and didn't fully price in the DMX 200 investment rationale.
Right.
It's like the market put on its reading glasses for the EPS line, but took them off for the strategy update.
So how does this fit the bigger picture? What's happening in biotech generally?
Well, small and mid-cap biotech, the space Amicus lives in, has been choppy. Think policy worries in the U.S., tighter funding. The main biotech ETF, the XBI, was actually down year over year before this call.
Okay, so a tough neighborhood.
But interestingly, the XBI had actually been rallying quite nicely in the 1 to 3 months before Amicus reported, up double digits.
So Amicus kind of bucked that recent positive trend with its post-earnings dip.
Exactly, which suggests this wasn't just broad market malaise hitting them. It points to something specific, some company-level scrutiny or perhaps just profit-taking after a run-up.
It feels like in this market, investors are demanding near perfection. One slightly off number, even with a good explanation, can be enough to spook them.
That seems to be the case. You need squeaky clean execution and perfect guide integrity. The strategic story for Amicus is still there, though, right? Galafold steady, Pombiliti plus Opfolda accelerating, and now DMX 200 as this potential third engine.
Plus that 17-quarter track record.
Exactly. Those are real green flags for operational discipline.
So, looking ahead, what are the key things investors should watch? The catalysts.
Hey, near term. Keep an eye on those Pombiliti plus Opfolda launches and reimbursement wins in the new countries throughout 2025. Any updates there are important.
And the pipeline.
The big one is DMX 200. Getting that phase 3 ACCN3 study fully enrolled by the end of this year, 2025. That's a major milestone. Hitting it would be a big confidence booster.
What else?
Just the regular quarterly check-ins, right? Watching the revenue keep growing, seeing if those margins hold up, making sure they hit that GAAP profitability target in the second half.
Yeah.
And, any more deals, more business development.
You mentioned the Pombiliti plus Opfolda switching dynamics earlier. Why do patients switch from existing therapies, especially after being on them for a while, maybe a couple of years?
Yeah, management touched on that. Initially, a lot of switches happen when a patient is clearly declining on their current therapy. Yeah, they're getting worse, so the doctor tries something new.
Makes sense.
But what Amicus hopes, and what their data suggests might happen, is a shift. Because Pombiliti plus Opfolda actually showed improvement in studies, not just slowing decline. So the idea is maybe doctors start switching patients proactively before they decline, seeing it as a potentially better standard of care.
So moving from reactive switching to proactive switching.
That's the goal. Doctors look at biomarkers, muscle strength tests like the 6-minute walk, overall quality of life. If Pombiliti plus Opfolda keeps showing benefits across those, you could see that shift happen.
Yeah.
Oh, and they also mentioned feeling good about their Galafold patents, which is important for its longevity.
Okay, got it. Right, let's shift gears to our This Is Not Financial Advice segment. Given this whole paradox, strong ops, strategic investment, but a wobbly stock reaction, what's an outrageous but plausible thought here?
Well, sticking with that paradox, it feels like the market might have thrown the baby out with the bathwater a little bit on the Q2 results. It hyper-focused on the EPS miss, largely driven by that strategic $30 million for DMX 200.
Okay.
So the outrageous but plausible idea is thinking about let's call it a catalyst-driven accumulation thesis, basically using this dip as an opportunity.
Accumulating Amicus shares.
Yeah, based on the idea that the market is currently undervaluing the DMX 200 potential.
Yeah.
You've got this massive unmet need in FSGS, first-in-class drug, FDA alignment on the endpoint, phase 3 enrollment wrapping up by year-end.
So the market focused on the $30 million cost today, not the potential value tomorrow.
That's the thesis. The short-term accounting noise might be masking the long-term value creation from adding this third leg to their story. So the idea is you accumulate shares now ahead of that phase 3 enrollment catalyst, essentially buying into that future growth story, potentially at a discount because of a temporary accounting hit.
While the core business keeps chugging along.
Exactly. Galafold steady, Pombiliti plus Opfolda is growing fast, like that 58% clip. The bet is that by year end, maybe early next year when DMX 200 enrollment is done, maybe more positive Pompe launch data comes out, the market might be forced to look again and reevaluate the whole picture, potentially leading to a re-rating.
What are the risks to that thesis?
Oh, plenty of risks, of course. Biotech is risky. DMX 200 enrollment could get delayed. The phase 3 data, when it comes later, might be complex or not as clear-cut as hoped. Pompe launch momentum could hit bumps. And just general biotech sentiment could stay negative and act as a headwind.
So it requires patience and tolerance for volatility.
Absolutely. This isn't a quick flip idea. It's betting on the underlying science, the execution track record, and that DMX 200 pipeline catalyst playing out over the medium to long term. But for someone willing to look past the Q2 EPS noise, it's an intriguing setup.
Okay, let's bring it all home then. Amicus Therapeutics Q2, definitely strong revenue, beating expectations, driven by both Galafold and that accelerating Pombiliti plus Opfolda.
But that GAAP net loss was heavily influenced, you could say caused, by the strategic $30 million investment in the DMX 200 pipeline asset for FSGS.
Management sounds very confident. They reiterated all their guidance, still targeting positive GAAP income later this year, and they've got that big $1 billion plus revenue goal for 2028.
Yeah, they clearly believe in the long-term story, the potential of their current drugs, and now this added boost from DMX 200.
And yet the market's initial reaction was cautious, ending the day lower. That contrast is really the core story here.
It really is. Operational confidence meets market skepticism.
And of course, just a reminder to everyone listening, this discussion is purely for informational and educational purposes. It is absolutely not financial advice.
Definitely not. Always do your own homework. Talk to a qualified financial advisor before making any investment decisions based on anything you hear.
So we'll leave you with this question to think about. In a market that seems pretty jumpy right now, how do you personally weigh a clear operational success and a bold strategic investment against one accounting metric that looks negative, especially when that negative is tied to future growth potential?
Yeah, how much does that short-term market sentiment sway your view of the underlying fundamentals and the long-term story? Are you looking at the forest or just that one tree?
Something to mull over. Thanks for joining us for this deep dive into Amicus Therapeutics. We hope it gave you some valuable insights.